Here is the mortgage interest rate update for the first week of February. So we're still, in the grand scheme of things, we're still pretty volatile in terms of what interest rates are doing on a week-to-week basis. Thankfully, we are way down from where we were in October. We peaked around 8% for a 30-year conventional fixed. We're now around the mid-sixes. We're just a pinch higher than the 6-month low, which we saw at the very beginning of January, which is around 6.5. Right now, we're about 6.6 to 6.8, depending on your credit score, depending on which lender you go with. But for the grand scheme of things, over the course of the past year and a half, it's not a bad spot to be in. And what we're hearing from the Fed, even though unemployment is still very low, we're still at about 3.7%. The indications, the rumor mill coming out of the Fed is that we should expect interest rates drops this year. And that is going to significantly lower the mortgage interest rates, to the tune of another half point. If we're looking at best case scenario, we may be down a full point by the end of the year. I wouldn't bet on it, but it's not outside the realm of possibility. So what does that mean if you're in the market to buy or sell a home? Well, let's attack the buy part for a moment. So if you're looking to buy a home, interest rates dropping is lowering your monthly payment, and that's all good and gravy. But another factor to consider is as those rates drop, more and more people are coming off the sidelines that have been waiting to buy until the interest rate got to a reasonable rate for them. And they're going to be coming out of the woodwork, and they're going to increase your competition as you're looking for a home as well. And as we head into spring and summer, which normally has increased activity, that's only going to make things worse for you if you're a buyer, right? So this next month or so may be the calm before the storm. Remember, you date the rate, buy the home. So the idea is that you want to get the price of the home as low as you can, and even if the interest rate is a little higher than you'd like, you can worry about refinancing that later. Even when you factor in the cost of refinancing it, it's still going to save you a massive amount of money versus if the property prices increase just a small amount. And now let's take that assumption of property price increases, because there's a lot of sentiment that property prices are actually going to decrease. Even here in North Texas, I hear a lot of people talking about bubbles bursting and this and that, prices decreasing, and they're planning on looking for value. Is that possible? Sure. With what we're seeing just since the beginning of the year, just in these first 4 or 5 weeks, what we're seeing is that competition is already increasing. So with interest rates being so high and competition increasing, days on market decreasing, and the sale price versus list price ratio closing the gap, if we're already seeing that with interest rates, between 6.5% and 7%, I would expect to see that worsen from a buyer standpoint as interest rates fall. I could be wrong, and really the only indicator that wouldn't follow is if the jobs report, if jobs as a whole gets considerably worse. So if unemployment increases significantly, then we can definitely see things reduce in competition, because obviously if you don't have a job, you can't afford a home, and that's going to affect the housing market. So pending a major economic downturn, major unemployment increase to the tune of 5% or more unemployment, it looks like this either stagnant or increased competition is here to stay. And when you factor in the interest rate decreases, I would expect that to continue further. So if you are planning on buying this year, especially if you're planning on buying new construction, because builders are increasingly offering incentives because they want to get rid of inventory as much as possible. Remember, for them, the ebbs and flows of the housing market don't factor into their decision making as much as the fear of what happens if a downturn happens. They need to get rid of all inventory before that happens. That's their mode. The sky is falling all the time when it comes to negative economic indicators. So from a builder's perspective, it's everything is bad in the housing market. But from a buyer's perspective, you could get some great incentives from builders right now. So even if the interest rate isn't as low as you would like for it to be, I would still seriously consider, if you found the right property that met your needs, that is at a reasonable price, I'd go for it and worry about refinancing at a later date.